Financial freedom, passive income, and positive cash flow are not just fancy terms. They're your ticket to a life where you call the shots. Imagine waking up every morning, not to the blaring alarm for your daily commute, but to the soothing sound of your bank account growing. Picture a life where your assets work tirelessly for you, churning out enough cash to cover your needs and your wildest dreams. Sounds too good to be true? Well, it's not. It's a reality for many, and it can be yours too. Welcome to MoneyWise Investor, your trusted source for financial information. In this video, we're going to break down 8 types of assets that are turning ordinary folks into wealth magnets. These aren't just random picks. They're tried and tested wealth generators endorsed by financial gurus, like Robert Kiyosaki. So, if you've ever dreamed of ditching your traditional 9-to-5 job to travel the world, start that passion project, or just sleep in on a Monday, stick around. This video is your roadmap to that dream life. But before we jump into these golden assets, let's get crystal clear on what we're aiming for. What does it really mean to be financially free? How does passive income work its magic? And what's this cash flow everyone's buzzing about? Strap in, because we're about to demystify the 3 pillars of wealth that'll set you up for a lifetime of abundance, starting with cash flow. The foundation of financial freedom starts with positive cash flow. Simply put, cash flow is the money coming in and going out of your accounts. To build wealth, you need to have more money coming in than going out. This surplus, or positive cash flow, is what allows you to invest, save, and potentially achieve financial independence. But how do you create positive cash flow? Well, it starts with managing your expenses and increasing your income streams. Cutting unnecessary expenses, negotiating better deals, and finding ways to earn more money through side hustles or business ventures can all help boost your cash flow. Once you've got a handle on your cash flow, you can start directing that surplus toward income-generating assets. Which brings us to the next step, passive income. Passive income is the holy grail of wealth building. It's money that flows into your accounts with minimal ongoing effort or active involvement on your part. Imagine having multiple streams of income working for you 24/7, even while you sleep. Think about it. When you work a regular job, you're trading your time for money. There are only so many hours in a day, which means your income is capped. But with passive income, your earnings potential is limitless. Your money works for you, not the other way around. There are countless ways to generate passive income, from rental properties to dividend-paying stocks, royalties from intellectual property, and even automated online businesses. The key is to invest your positive cash flow into assets that can provide recurring income with little maintenance required. And from here, we're on set to achieve financial freedom. Financial freedom is the end game, the point where your passive income streams are so robust they cover all of your living expenses, allowing you to quit your job and live entirely off your investments. Financial freedom means never having to work for a paycheck again. When you hit this point, work becomes a choice, not a necessity. The point is that you're in control. Your assets fuel your lifestyle, giving you the freedom to chase your passions, spend time with loved ones, or just relax without money worries. To reach this level, you'll need to accumulate enough income-generating assets to replace your current earned income, plus a buffer for emergencies and future expenses. It's a lofty goal, but one that's absolutely attainable with patience, discipline, and the right asset allocation strategy. Now that we've covered the 3 steps to wealth, let's dive into the specific asset classes that can help you achieve financial freedom, starting with number 1, real estate. Real estate has long been a favorite among investors seeking passive income and long-term appreciation. From rental properties to REITs, real estate offers numerous opportunities to generate cash flow, while benefiting from the potential for capital appreciation. One of the most popular strategies is buying and renting out residential properties, such as single-family houses or multi-unit apartment buildings. The rental income can cover your mortgage payments and maintenance costs and still leave you with a positive cash flow each month. For those looking to invest with less hands-on involvement, REITs provide an easy way to gain exposure to the real estate market without directly owning properties. These trusts own and operate various types of income-producing real estate, such as office buildings, shopping malls, and healthcare facilities, and are all legally required to distribute at least 90% of their taxable income to shareholders in the form of dividends. Number 2, stocks. Investing in stocks is another tried-and-true method for building wealth and generating passive income. While stock prices can fluctuate in the short term, historically, The stock market has provided solid returns over the long run. One strategy for generating passive income from stocks is to focus on dividend-paying companies. These are businesses that distribute a portion of their profits to shareholders in the form of regular cash payments, known as dividends. By reinvesting these dividends, you can compound your returns and potentially build a sizable portfolio over time. Another approach is to invest in growth stocks, companies with strong potential for future earnings growth. While these stocks may not pay dividends initially, the expectation is that their share prices will appreciate significantly over time, allowing you to generate capital gains when you eventually sell your shares. Number 3. Bonds. Bonds are debt securities issued by governments, municipalities, and corporations to raise capital. When you purchase a bond, you're essentially lending money to the issuer in exchange for regular interest payments known as coupons, and the eventual return of your principal investment. While bonds generally offer lower potential returns compared to stocks, they can provide a steady stream of passive income and are often considered less risky investments, making them an essential component of a diversified portfolio. Number 4. Business ownership. Owning a profitable business can be an incredibly lucrative asset, generating not only passive income, but also potential capital appreciation if you decide to sell or go public. Many entrepreneurs start businesses with the goal of eventually stepping back from the day-to-day operations and allowing the company to run itself, providing them with a steady stream of passive income. This could involve hiring a management team, franchising the concept, or even selling the business outright and collecting royalties or a percentage of profits. Number 5. Intellectual property. In today's knowledge-based economy, intellectual property has become an increasingly valuable asset class. Intellectual property refers to creations of the mind, such as inventions, literary and artistic works, designs, and symbols, which can generate passive income through licensing, royalties, and other forms of monetization. One example of intellectual property is writing a book or creating digital content such as online courses, software, and apps that can be sold repeatedly with little ongoing effort required. Once the initial work is done, you can sit back and collect royalties or sales revenue from each unit sold or subscription purchased. Another form of IP is patents and trademarks. By licensing your patented inventions or trademark brands to other companies, you can generate recurring royalty payments without having to manufacture or sell the products yourself. Number 6. Private equity. Private equity involves investing in privately held companies or acquiring a controlling interest in public companies to improve their operations and profitability, ultimately selling them at a higher valuation. While private equity investments are typically only accessible to accredited investors, usually those with a high net worth or significant income, they can offer the potential for substantial returns and passive income through dividend payments or share of the profits when the company is eventually sold or goes public. Private equity firms often take an active role in managing and guiding the companies they invest in, leveraging their experience and resources to drive growth and increase value. As a passive investor, you can reap the benefits of these efforts without being directly involved in the day-to-day operations. Number 7. Dividend stocks. By reinvesting your dividends through a dividend reinvestment plan, or DRIP, you can compound your returns and grow your investment portfolio over time. This strategy allows you to gradually accumulate more shares without having to invest additional funds, creating a snowball effect of passive income generation. When evaluating dividend stocks, it's essential to look beyond the dividend yield, which is the annual dividend income expressed as a percentage of the stock's price. You'll also want to consider the company's financial health, payout ratio, which is the percentage of earnings paid out as dividends, and track record of consistent dividend growth. Number 8. Commodities. Commodities such as precious metals like gold and silver, agricultural products like coffee and wheat, and energy sources like oil and natural gas can also serve as income-generating assets in your portfolio. One way to generate passive income from commodities is through futures contracts, or commodity ETFs, which allow you to speculate on price movements without physically owning the underlying assets. However, this approach involves significant risk and requires a deep understanding of commodity markets and trading strategies. A more passive approach is to invest in companies that produce, process, or trade commodities. These businesses can generate steady cash flows and potentially pay dividends to shareholders, providing you with passive income exposure to the commodity sector without the volatility of direct commodity trading. Additionally, physical ownership of certain commodities, like precious metals or agricultural land, can provide income streams through leasing, renting, or selling the underlying assets or their byproducts. In conclusion, attaining true financial freedom and the ability to never work again is a lofty goal, but one that's well within reach if you're strategic about building a diversified portfolio of income-generating assets. The key is to start early, invest consistently, and remain patient and disciplined throughout the journey. If you found value in this video, be sure to give this video a thumbs up and share it with your friends and family. And if you're not already part of our community, hit that subscribe button and turn on notifications so you never miss another video, packed with insights and practical tips for mastering your money and achieving financial freedom. Thanks for watching, and until next time, stay money-wise.